more and more Americans are living paycheck to paycheck, and that's because we're living through what some people are starting to call the Silent Depression, a time that's comparable to one of the worst economic times in US history, the Great Depression, which lasted between the years 1929 to 1941. And the reason that it's being called the Silent Depression is because it's not necessarily something that's been acknowledged by the government, but it is something that people are starting to feel about their money, and that's why you might have seen videos on platforms like TikTok which got millions and millions of views comparing 2023 to the Great Depression.
I want to show you the numbers on what the average income was during the Great Depression to now. So 1930, the average net yearly income of Americans annually was $4,887.
So using data from the BLS.gov, the government's own website, you can see that an income of almost $4,900 in 1930 is worth the equivalent of over $87,000 in 2023. And this is per person, not per household. And obviously the average person today is not making anywhere near $90,000 per year, and yet they were during the Great Depression. So what the heck is going on? The video then goes on to show that in 2019, the average person made a little over $31,000 per year.
2019, and this was the average income for one American in the United States.
So it really does seem like we're living through some crazy silent depression, and I was shocked and I couldn't believe that right now you're telling me that we're experiencing a time that's potentially worse than the worst time in US economic history? There is no way. And the more I looked into this data, the more I realized it was extremely cherry-picked to show a certain narrative because that's what got the most views on social media. The truth is, we do have it a lot better than the Great Depression, but we also kind of don't. Things could obviously be a lot better, but things aren't that bad yet. First, the worst years of the Great Depression are considered to be between 1932 to 1934, which is when the stock market reached the lowest point and lost over 80%. And the average person in that time was not making $4,800 per year. The average across all industries instead was a lot closer to $1,400 per year, which by today's dollar standard is closer to $30,000 a year. That's the real 1930s income. But I also wanted to find out how that compared to today's income, considering all this wage growth that we've had since the start of the pandemic. And I found that data from the BLS showed the median income across all ages and all industries was closer to $50,000 per year in 2022. So by income standards, we're doing a lot better today than we were in the 1930s. But then I wondered, how much did everything cost back then though? Let's look at the big three: transportation, food, and housing. Because back in 1932, Ford introduced its replacement for the Model A called the Model B. It's creative. It could comfortably fit 5 people, it had a V8 engine which had 65 horsepower, and it could go as fast as 75 miles per hour, and it actually looked good. It was by any measure the quintessential pimp sled desired by all who laid their eyes on it. And brand new out the door, that car cost $460, which by today's measure is about $10,000. That's about a third of a person's income in 1932 for a brand new car. But now let's fast forward to 2023, because the price of a brand new car has actually gone down, but it's still over $48,000. That's an entire yearly income, and that's before taxes. Now you'd think that with all of our technological advancement and experience of making cars close to a century that we'd figure out how to make them even cheaper than we did back then, but nope. But then I looked into food and housing costs, and that's when it got even worse. So let me show you all the data regarding the silent depression, what's actually going on in the economy, and how to potentially stay ahead of it. So let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the 1930s.
Let's meet Ruth Shelley and Robert Ostman. And they love the 1930s so much that what have they done, Ruth?
Well, they've ditched their modern lives to immerse themselves completely in the era. And as you can see, that is Ruth's home there, where we're joining them this morning.
Tell us, why do you like to live in the 1930s? Have you seen food and housing prices lately? That's why. So let's take a look at those. Now, information on food was pretty hard to find because there's not a lot of data as far as what people spent on groceries back then, but here are just some of the prices from the 1930s. A dozen eggs was 18 cents and chicken was 20 cents a pound. Overall, everything was significantly cheaper in relation to people's incomes. But then I looked into housing and that blew my mind. The median home value, even in 1940, was only $2,900, which was about 2 times the annual yearly salary at that time. Meanwhile, today, the median home price in 2023 was $416,000, or 8.3 times the median income of $50,000. But hold on a minute, what does a house from the 1930s even look like? According to thepeoplehistory.com, here are some actual home listings from the 1930s. You could get yourself a 4-bedroom bungalow in Nebraska for just $2,100. I actually had to look up what a bungalow is, but apparently it's usually a single-story house with a sloped roof and something that has a porch or a balcony out front. Something that probably looks like this. Now, if you found a house in 1932, a 4-bedroom for $2,100, that would be like finding a 4-bedroom house today that was worth $75,000. Here's another house in Lima, Ohio for $2,500. You could also get yourself a 10-acre farmhouse in Sheboygan, Wisconsin for $1,900. And you could even get a 5-bedroom in Hammond, Indiana for only $2,000. But the list goes on and on. The point is this: even though our incomes have relatively doubled since 1932, the relative purchasing power of the US dollar has gone way down. And what's most interesting is that even though the average person doesn't know or look at this data every single day, they feel it when they're asked about how much money they think they need to be comfortable right now.
The cost of healthcare, that has skyrocketed. The cost of attending college has skyrocketed. The cost of purchasing a home has skyrocketed. But nowhere has anyone said wage growth is up 15%, right?
Right. Because the price of everything has outpaced that 15% wage growth. In fact, here's what the average budget looks like in 2023. It was estimated that after taxes, the median take-home pay was about $3,300 per month. Of that, $2,000 goes towards rent, $690 towards food, and almost $100 towards healthcare. And that's already $2,800 per month on just the essentials to live your life. And that doesn't even include a car payment to get to work, for which the average is about $500 per month for a used car and $700 a month for a new car. That right there is already over $3,300, which exceeds the total monthly budget for the average American person, which also leaves people with almost nothing to prioritize paying down their debt, like their student loans and credit cards, which have an interest rate that's so much higher than anything we could expect to make from the stock market, which also means the average American can't even start saving for retirement. And that's why 72% of Americans don't feel like they're financially secure.
The Federal Reserve has implemented 11 interest rate hikes to combat inflation since March 2022. But more than a third of Americans said rising interest rates kept them from financial comfort.
What's crazy about interest rates, though, is that the 1930s had it better. Because back then, their Fed dropped their interest rate to below 2% and they kept it there for the entire decade to stimulate the economy. But in 2023, because of said inflation and how expensive things have gotten, our Fed has increased interest rates. So even if you want to borrow money to buy those expensive things, you can't, which is making the situation that much worse.
Look at the person who was going to buy a house that was, let's say, $375,000 2 years ago. Their monthly payment would have been less than $2,000. Now it's about $3,400. And it's the same house, right? The only thing that has changed is the interest rate.
Purchasing a car is more expensive. It's more expensive to maintain a balance on a credit card with the new offers for a credit card, even for the best qualified individual, being at 20.5%.
Now, to be fair, we do have it better than the Great Depression, because back then, unemployment went up to a high of 25%. 1 out of 4 people were out of a job and more than 1,000 banks failed and lost their customer deposits. This was before banks were actually insured. So in a way, we do have it better than the Great Depression, especially because now we have technology and iPhones and social media to help us cope with our awesome mental health. But that's why some people make this comparison and why they call this time the Silent Depression. So the question is, what can anyone do about it, and how can someone get ahead? Here's what I'm personally doing about it, but first a quick word from today's sponsor, which helped make these videos possible. So if you've been following my YouTube channel for a while now, you know that Bitcoin is part of my core personal investing strategy, and here's exactly why. Bitcoin's 1, 3, 5, and 10-year compound annual growth rates are 23%, 31%, 32%, and 73%. That's compared to the stock market's 7%, 9%, 9% again, and 10% respectively. Now, I realize that Bitcoin is not for everyone, but if you ever wanted to get into it, one of my personal favorite platforms is Cash App. Cash App is one of the largest public companies to support Bitcoin. Here are just some of the things you can do with Cash App. You can buy Bitcoin with as little as $1, you can send Bitcoin via the Bitcoin network, or to your friends directly through Cash App. There's also something called the auto buy feature that allows you to dollar cost average into Bitcoin on a schedule so you don't have to try to time the market. But they also have other incredible features like gifting Bitcoin to your friends and family and auto investing your spare change through roundups with your Cash Card purchases. And if you're a true believer of Bitcoin like I am, Cash App even allows you to invest a portion of your paycheck automatically into Bitcoin. But one of the coolest features people absolutely love is if you want to share the gift of Bitcoin, you can send Bitcoin to others for free using the Lightning Network. To get started, tap the Dollar Payments tab to get to your Cash App home screen, and then go to the upper left-hand corner and tap the QR code scanner, and then hold your phone over the Lightning Invoice QR code to scan it, and then follow the prompts and then pay the request. It's that easy. Use the link in the description below this video to try Cash App now. It's super easy to get started with. Let me know how you like it. Thank you, Cash App, for sponsoring this segment of the video, and now let's get back to it. I wish I could give you a blueprint of how someone could make more money and how to get ahead, but the truth is, I didn't make my money from investing in the stock market or buying Bitcoin or trading stocks and being really smart. The majority of my wealth was made from doing YouTube videos, which was partially due to luck of being at the right place at the right time with the right skill set, talking about the right things. And even though I've been obsessed about personal finance and teaching myself everything I can about investing for over 10 years now, I'm far from calling myself an expert. But the one truth that I've learned throughout my years of doing this is that investing is not going to help you get ahead, especially if you're already behind. And that's because the interest rate on debt right now is far higher than anything you could expect to make from the stock market. So it's better off to pay your loans anyway. And there are a couple things that experts say to do that could actually help. Like for instance, moving to a lower cost of living area and lowering your fixed expenses. Because it's not about how much money you can make, it's about how much money you can keep. And then experts say to build a 3-month emergency savings fund in case you lose your job. Now I'm no expert, but I did exactly that. I saved and I lived below my means, and I invested enough to give myself a 1 to 2 year run to try my hand at YouTube. But once again, I'm no expert, and if I was starting all over again but YouTube was not an option, then I'd find a way to get into trade school or maybe get a tech job or something in the medical industry. Anything that would increase the income first, because that will have a far bigger impact and pay way more dividends than actually investing into dividend stocks. And once I got that job, then I'd focus on paying down the high interest rate loans first, and then investing in the market. And I think that will have a far bigger impact on your financial security than any stock tip or advice I could ever give. And lastly, just remember, for your own mental health, if you ever feel behind or if you feel down about the economy, just remember it's not actually your fault. Now, it's definitely possible to get ahead, but my philosophy is I only take responsibility for the things that I can change and the things that are within my control. And anything that's not, I try not to worry or stress about it. But I'd love to hear your tips and tricks about what you can do to stay ahead. And as always, focus on your own investment journey. I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. Don't forget to grab your free stocks, links are down below, and then go track them automatically with the spreadsheet link down below in my Patreon. Love you, thank you so much for watching this video. I'd love to see you back here on Monday, Friday, sometimes a Wednesday. See you soon, bye-bye.